it's not that I think that it doesn't work for crypto and other markets. It does, like, because it's the only thing to me. Like,
Mhm.
in my mind, all other methodologies, like I was telling him earlier, is like all other methodologies, whether it be CC dumbasses, method, or
Mhm.
even Wyckoff or Dopes or whatever. It doesn't matter. Like, and it's not to say that any of them are bad or good or whatnot, but they are all based off of this. Supply and demand is the root of everything on the charts and in the markets, in my opinion. And
Mhm.
I think a lot of people uh, would agree with that assumption. But
Mhm.
let me pull. Just trying to make sure my screen is sharing right because I don't want to mess something up. But what I meant was is I think that it has to be adapted to, like, from forex, because okay, say you learn how to market structure from a guy that trades only forex, and he may talk about
Right. Yeah.
Bitcoin here and there or whatnot, but like it's not the same, man. You know what I mean? Because
No,
like
100%. Yeah.
in a day, like forex, what may move like this, this little tiny little blip, you know what I mean? But then
Yeah.
Bitcoin, or Bitcoin can do like this, and then like if you wanted to say like another like shit coin, like a shit coin could do like this, like,
Right.
so it kind of stands to reason that you can't mark this asset and this asset and this
Are you
asset.
streaming right now
Oh,
or?
I'm not sharing it. Oh shit. Okay,
Okay.
I'm so sorry.
Yeah. No.
Thank
No
you.
worries.
Yeah, I had pulled it up on my OBS, but so I just assumed I was streaming it like an idiot. But sorry about that.
Yeah. My bad. That's
No
the wrong
worries.
button.
And yeah. All right,
But
so
no, Dev.
this one. Um, so yeah, so we have to adapt it, right? Like, like what I was saying is like if right here in this circle is Bitcoin, like here's a little move, and then this one is like, or I'm sorry, this was a forex, so you have like this little move throughout the whole day in forex, and then in Bitcoin you have this kind of move, but then like some shitcoin you have like this crazy move. Like, we can't
Right.
we can't mark the market structure exactly the same way. The main rules are going to apply, but to make it mechanical, to make it repeatable, and something that we can execute without with as little emotion as possible, because that's really one of the biggest tricks to taking out emotion out of our trades, is to develop a strategy to make something that's repeatable, that we can have a rule set and we've back tested it, and over 100 trades it works 71 times, and if our risk to reward is this and our strike rate is that, like, we know
Yeah.
we can lose 15 trades in a row, but hey, it's all good. Like, I know over time this plays out in my favor. I've already tested it, so that's kind of the largest benefit to making things like in that mechanical kind of structured way, developing that rule set. Um, so that was my main point for what I was saying to you the other day. Now, the other point was, so let's say, freaking paintbrush. So let's say we're here. I wish you could mark on my chart. Pull your chart up and put it on a 4 hour, and do me a favor, like, put it on. If you have the Bybit chart, the BTC USD Bybit.
I have Binance, but yeah, I can pull up a Bybit really quick.
Yeah, if you don't mind pulling up a Bybit, I'm just more familiar with it. Like, they're very similar. On most time frames, there's a very negligible difference, but I mean, like I say, ultimately it doesn't matter. These are so similar that it wouldn't be a big issue, but just for argument's sake. And whenever you have that up, if you'll just kind of share it on screen.
Oh yeah, I got it up and I'm sharing now.
Okay, cool. All right, let
Oh
me.
yeah. Yeah, let me just go to the 4 hour really quick.
Okay. Now, what I want you to do is I want you to show me how would you find your 4 hour swing structure.
So my 4 hour strength structure would pretty much be probably from here
Mm-hmm.
up to here, from here up to this piece.
Mm-hmm.
I'd say roughly probably just a little swing down here,
Mm-hmm.
here, all the way down here,
Mm-hmm.
up to here, here, kind of like that,
Mm-hmm.
all the way down, up to here, down to this swing, back here, down here, and then back down here and up to here.
Okay. Now, have you put forward any type of rules to determine where you put your highs and lows at on each time frame? Out of curiosity.
Yeah, absolutely. It's kind of like I would say right here, I would kind of put it at the high here. It needs to break, or say like it's got to break the higher part. So this would be the swing high. I'd mark it here on the red candle.
Okay.
Swing low, I'd mark it here in the green candle.
Okay, okay, but what I mean is like, what is the criteria like? You may not have one, and that's okay. It's just a question. It's a relevant question. Is like, go back to that area you were just pointing in,
Yeah, just right over
and where
here.
you had where you had the high, and then you had the low, right? Okay,
Right. Yeah. Sorry, it's the low
what?
and then the high.
Yeah. Okay, so do you have any type of rule set that you follow to say this is where the swing high is and this is where the swing low is and what needs to be broken or lost, or are you just doing it intuitively, like meaning, oh, this looks like the high, this looks like the low, it seems pretty obvious, not neither way is wrong, I'm curious.
So I'd say a little bit of yes to both. So I would put it
Mm-hmm.
right here. We need to get up above here to break this move and keep moving up.
Mm-hmm.
And then down here, if we go below this, then
Uh-huh.
if we get a hard close under this, we're probably gonna be moving down a little bit.
Mm-hmm.
Kind of like that. But you can intuitively, okay, it needs to go below here, so
Mm-hmm.
it can go farther down. Needs to get above here to go farther up.
Okay. So if I can like add something,
Yeah.
like, for one, I think it's good to mix. A lot of people argue against like mixing this method with that method and blah blah blah, and I personally am in favor of it. But obviously there are things that you should and shouldn't mix, and a lot of these are, of course, my opinion. You know what I mean? Like trading and
No.
TA is very, like, it's artistic, personable, whatever you want to put it, of course, but not everything is like Cotton always says, like, oh, this is my science, like, no, it's not a science. I mean, there are rules, there are guidelines and whatnot, but you know I think we need to, as traders, develop rules for ourselves, or at least like kind of guidelines, is any place we can put them. Okay, so like
Right.
where you had the high before, explain to me why that was your high. Where did you say your high was? To your left.
Just right here, literally at this top of this valley right here.
Okay, so
So I
you have it
usually
at the green candle right there, right? Like, or the red
kind of
one.
like the red candle. I would count it as kind of like here, right here,
Uh huh. Zoom in, zoom
because I'm
in,
mainly
zoom in a
counting the
little
body.
bit. Zoom in for me a little bit.
Yeah,
Yeah, and
right here.
pop a line on what you think that high is right there that you need to lose.
right there. And
Okay.
then I'll just mark the low really
Yeah,
quick.
yeah,
So
yeah.
just on that side,
Perfect.
I would say
Perfect.
just like right here.
Okay. So on a chart we're on the time frame we're on a 4 hour, I guess what I'm trying to understand from your perspective, and again, I'm not saying it's wrong. So don't. I know you know me well enough to know that I'm not being like trying to offend you or nothing like that. But
Mhm.
like I feel like you're trying to take something from Cotton's method that, in my opinion, isn't really relevant in market structure, at least not on the time frame that it's in. And this, in my opinion, is like something that he tried to. Okay, so we both know. I think it's safe to say, and anybody that ends up
Mhm.
watching this, it's safe to say that he didn't create this. Like he didn't discover this science, on his own. Like
Right.
he took something that he learned from someone else, and that they learned from someone else, and so on and so forth. And he tried to, rebrand it and market it as his own thing. Okay, like would you agree with that? At least mostly, like.
Oh, 100%. Yeah, we definitely know it's none of his stuff.
Right. Okay. So I think he discovered things on his own, but I mean, generally speaking, he didn't discover this, and
Hmm.
I think that break levels and, the way he marks bodies and stuff, like those things are super valuable, like especially bodies of candles. But we're looking at one time frame right now. Okay. So I'm going to pull
Hmm.
up the same time frame, February 22nd. That's where you were. So I'm going to pull up the same time frame. Um, okay, just trying to pull it up.
I'm gonna jump on your screen really quick.
Okay, yeah. Just let me know that. Okay, so it should be right here, right? Yes. Okay. Stretch it out a little bit. Okay,
And
so.
also, some of this knowledge is going from Phantom, because honestly,
Mm-hmm.
anything related to cotton,
Mm-hmm.
I've 100%, just thrown out the trash.
Okay.
Not completely everything. There's some things that, somewhat make sense, like the trends and stuff, and I
Mm-hmm.
definitely use some trends to give you
Mm-hmm.
like a general idea of where
Right.
direction is gonna go. Is it gonna close below this? That sort of thing.
Yeah.
And if I'm thinking like Phantom stuff, we would go to the daily to mark the swing structure to be more accurate.
Okay. Well,
That's how.
yeah. So let's. Yeah, and I'm not saying that that's wrong or anything, but let's
Mhm.
to keep things a little more direct and kind of like simpler, I guess, is let's think about each thing on each time frame, because you can mark swing structure on every time frame. Okay, and
Right.
they all play a part, but every time frame holds more weight or value, however you want to look at it. You know what I mean? Because
Right.
like for a level to get hit on one time frame, and if market structure is everything, then that level, if we have a 1 minute level get hit, then that 1 minute market structure meant something. Okay. Now that, the main reason I think, to get across for market structure is the reason we're marking it is to get our direction of where things are heading and what is like the confines of the move. So we want to find
Right.
our high and our low. All right. Now, and Forex, which is what Phantom uses, and Photon, and most of all those guys, they all trade
Right.
Forex. Like, they can use daily and, maybe 4 hours, some of them use to like mark their market structure. But crypto is so much more volatile, so much faster. Like, if we only like figured out our market structure on the daily and 4 hour and weekly and whatnot, I mean, man, shit, we'd be waiting all week for a level, and it would be sometimes like so far apart, like we'd miss 20% or 10% in between moves because of that. So we have to, I think, in my opinion, we have to kind of zoom in a little bit more. So, like for me personally, I go all the way down to 15 minute and sometimes even 5 minute. Like, but
Oh, to mark your
I,
swing structure.
yeah, and they all hold a different meaning for me. So like I'll pull up my chart real fast. Let me get rid of this box. So like on my chart here, like I will have what I do is, like if I go to my 1 hour, I'll have my 1 hour high and my 1 hour
Mhm.
low, and you can kind of see that's what it's working in between, right? So
Mhm.
now I know that on the 1 hour, like I'm in this range right here. Okay. Now if I go down to say my 15 minute, I may have to adapt this. No, I'm good. So I have a 15 and a 5 here together. If you see it's the 5 minute and then the 15, they're in the exact same spot on the
Uh,
bottom, and they're a little different on the top.
mhm.
So like I know that this is my range and my 15 and 5 minute. You know what I mean?
Oh, and you use
So
the wicks. Okay. Yeah.
yeah, and I'll tell you why, and then so if I go to the 5 minute, this is that same like range, but now you can't see the 15 because I only make them visible in certain time frames, and it's
Oh, sure. Yeah.
usually it's only one time frame away from what it is, and then 5 minute like I don't go lower than that for actual structure. Okay, so now to go back to where we were before, and I believe you were on like February 22nd. Were you were right?
February 27th.
27th. Okay.
Yeah. So right there. Yeah. Uh,
Right
that
here.
peak right there.
Okay,
Yeah.
right
That one
here.
there.
Yeah. Okay, so you had like this body marked,
Exactly.
correct?
Yeah.
Yeah. So
Right. The
you
button.
had that. All right. So for swing structure and the way that I have like learned from a lot of different sources and the way that I've kind of applied those things to crypto is you really like it varies a little bit by time frame. Okay, so like on a weekly, daily, and a 4 hour, what I would do is I would, if I was trading a new asset, I would kind of like make my chart a little tight like this, and then I would go
Mhm.
through here and I would measure like what are these valleys like, how big are they, you know what I'm saying? So like the reason I make them a little tight is because if I widen them up, I'm going to see a lot of valleys in here,
Right.
so but if I make them a little bit tighter, like I kind of don't get so lost in the weeds. So I can kind of see like from here, like obviously we have this big one, and if I measure down to right here, that's 21%. I mean, that one's kind of a little out of the ordinary.
Mhm.
Sometimes you may have to widen it up a little bit, but like right here, I have this swing high because when you're marking market structure, in my opinion, you should use swing highs and swing lows.
Mhm.
It doesn't
Okay.
matter what color the candle is. That's besides the point. That's fucking magnet. So if I go down to this low right here, that's 5.57%. And then I'll measure from here up to there. That's 7. And then I'd measure from here down to like the lows of these. That's 9. And then so on and so forth. And I would measure all of the very prominent kind of like swings and valleys I see. And for me, on Bitcoin compared to a dollar on a 4 hour, I found that I need to see at least a 4% swing. So it from the swing high to low or the low to the high, it needs to be 4%. On the to simplify,
Why do you have a 4% rule?
well, because that's to make it mechanical. That's to make it
Oh,
like,
okay.
and sometimes you can break it a little bit. Like if you, for instance, like if you have something and you see like a really prominent valley, you know what I mean? But it's not quite
Right.
4%. Say it's like 3.5. You're like, well, yeah, I'll make this 4 hour. But more times than not, it's going to end up being a 1 hour. You know what I mean? And that's why sometimes you'll mark like for instance, like right here, like you'll mark like that's not a good one. This is a good one. So you'll mark like this thing, and you're like, oh, I thought this was a 4 hour. You know what I mean? But it doesn't quite reach it, and this isn't the only reason why it doesn't reach it. But my point is to say that if it were to go blow past it, but then still dump down. So say you marked like, this one, and you thought this was a important structure on the time frame you were looking at. And then it just blows right through it and keeps on going down. And it keeps doing that, even though you're marking them this way all the time. Like, more than likely, this is just like swing structure on a lower time frame. You know what I mean? Because if we go down to, let me change this to, yeah, that'll be fine. Yeah, because it's probably 1 hour 15 minute. Yeah, let's get on the 15 minute. Like, oftentimes when you'll go down, it's even lower than that. Probably going to choose a cutoff tool. Oftentimes when you go down, you'll see that it'll come up, and you can see it even hits it right here like once. You see what I'm saying? So like it would have been there, and then boom, it hits it and rejects. So it's like this was important swing structure on this time frame right here, and it may have even been important back here. Let's see if this one is part of it. Okay, so that one. So yeah, so this one right here, like I had the first time. So you see what I'm saying? Like this, even though it wasn't important on the time frame we were just looking at, it's still important on this lower one, because like that could have told you a lot of things. Like you could have gleaned a lot of information from that. Like, oh well, shit, it hit this and created what Cotton would call like an origin level. You know what I mean? And you could have gleaned a lot of information from that. And then you could have looked for a trade right here. You could have gotten in when this came up and rejected. You can be like, all right, well, I'm just going to get on this inverse hold at this point. You know what I mean? Because it came down, right. It broke this little low in here, so we had to change a character. And then we didn't have a flip, which I think you're familiar with a flip. So we didn't have a flip, because a flip would have come down below this. But we did have a change of character, and it's on a 5 minute, so it's not quite as risky as like one on like a higher time frame, right. But we could have gotten in on that, and then look, like bam, like we could have came down and got at least like 2 or 3% out of that. You see what I'm saying? So it's like that you can mark market structure on any time frame. But I think personally, like your rules have to change from Forex to crypto.
Depending on the time frame. Oh, okay.
Yeah, and exactly depending on the time frames. Okay, so for me, just to give you kind of like a heads up, and Angela for watching this, like what I do is on a 4 hour, I like to see 4%. I want to see a 4% move. So like if I go like right here, down to the valley, that's like 4.6, or it's kind of hard to tell where I'm snapping. Yeah, it's like 5%. So for me, like this is 4 hour swing structure, right from this high like to that. I would mark my 4 hour swing structure like that. And then I would go to here, and like you get better at kind of like marking it just kind of like freehand. I don't know if this one
literally like any single swing high, swing low, right? That's kind of what you're marking.
Yes, as long as the percentage meets what I want to see on that time frame. So, for instance, like, and you can, I've tried to really simplify it. So for me on a daily, I want to see 24%, because it kind of works out pretty close to that, oddly enough, which I think is kind of cool, because if you go back and start measuring valleys on the daily and you add them all up, say you measure 50 of them, and then you add them all up and then divide it by 50, you'll get a number pretty close to 24%. And then if you do that same thing on the 4 hour and you add up 50 of them and divide it by, 50, you'll get a number pretty close to 4%. And then for a 1 hour, it's close to 1%, and so on and so forth. You can kind of break it down. You see what I'm saying? So like a 30 minute would be, you get it. So I think that that's important because what you gotta kind of see is that if I, for instance, because Forex moves so slow, and that's the way a lot of them market
Yeah.
is, they'll just kind of go like, all right, well, from here to here to here, and come on, here, and then most of them wouldn't even count that. They would just go straight to this, you know what I mean?
Right.
And then they would go to like this, and maybe they'd count that, and then maybe they'd count this. But my point is like they're very far apart, you know? So it's like
Right.
the information that's showing you is so limited because like look what happens if I mark this here on the 4 hour and then I go to the daily, like that's literally just my daily swing structure. You see what I'm saying?
Right.
Like, I mean, it's almost perfect, right? Like, I mean, this is almost exactly how I would mark the daily. I would measure this right here from here to there. So I'm going to come over here to the side and I'll measure that up to that. Yeah, for me, that's not daily swing structure. So that's exactly what I would have done. I would have taken the lowest of these 2 points and I would have just popped right up here to this high. And
Mhm.
then I would check this. And I don't know if that's going to really constitute as it either. But yeah, so for me, that's not daily structure either. But again, it's close. So you can kind of take these and probably just pull these all down to this. You know what I'm saying? Like on the daily. Doesn't mean that these swings and stuff aren't important. It just means they're not important on the daily. That's my big point. It's like
Mhm.
they don't all have to be seen on one time frame. It's just like, do I want to see what's happening on the daily? Am I bullish? Am I bearish on the daily? In this instance right here, if I were to kind of continue marking this, because I would have started from
Mhm.
like back here and I would have kind of come up to that, and then I would have went to there, and then I went to there, and then because this is such a big wick, I wouldn't have used that on the daily because I know this is important on other time frames. I would have kind of went to this one because I could tell this one's a little bit lower. And then I would have went to there and then here, and I'll check the measurement of this little valley right here from the bottom to the top. Yeah, it's not a daily for me. I want to see at least very close to 24%, which all these other ones are. You know what I mean? So for
Mhm.
me, this is my daily structure. So am I bearish or bullish on the daily? Well, for me, I'm bearish because, like, as you know, at once upon a time, like we had this was our high and this was our low. This high was broken first. So what I would do from
Mhm.
this point, and this is the second point that I wanted to get across to you, is when I have my structure marked, how I would trace it to find out where I'm at now. Like I wouldn't start in here. It's just too little of information because I could have my highs and lows and the relevant, what I call the relevant swing highs and lows. They could be marked very differently. You know what I mean?
Right.
If I start from here and go backwards. But if I come back in time and I find a big move up and a big move down and I start from there, like that is more times than not gonna lead me to the information that I'm looking for. Give me 1 second. I'm just taking a sip of my drink.
No, no worries. Yeah, absolutely. That's something I've noticed. You have to go back to the beginning of the move, the very
Yeah,
beginning of the swing high, on the left side, not to the
that's
newest
right.
one, but you really have to look at the whole picture, like everybody always says. You have to
That's
like
right.
start on the left side, for example. Like you got a couple
Mm-hmm.
different levels you can mark, a couple swing lows. That's where you really want to mark them.
Yeah, and that's a trap that they want everybody, all the retail traders, to fall into because that's what all this is, man. Like all of trading, all these wicks, these big moves up, and I know you've screamed at your computer a million times like I have when a move comes up, you entered at this cotton level right here, and it comes
Right.
up and it goes down, and then, excuse me, I'm so sorry, and then
No.
it goes back up and then stops you out, and then dumps down another, 35%. Like, it's all a trap. Like, that's inducement. You know what I mean? They're inducing
Right.
you into the trade. They know all the retail traders are going to get in here and here, like Cotton teaches. And this is the biggest failing point, in my opinion, in Cotton's method, is he teaches you to get in here and here. And yeah, he may go down to like greedier holds, but it doesn't matter because unless you entered on the wick, your ass got stopped out. You know what I mean? Like if you entered here or here or here or here, like you got stopped out, and that's what that big candle comes from, stopping
Right.
all these people out, and then boom, it moves down, and then this is people taking profits because they know of the exact same thing happening on the other side down here, and all the people that entered in there. And then look, it happens again. Boom, big candle down. It's all a trap, man. So like, be paranoid as shit when you're looking at charts. Like that's the way
Right.
I've learned to look at it, and it's helped me a lot. And be greedy and get Cotton's hard closes, and not always his break levels, but that's like a different
Yeah.
discussion that we can get into because I have found a way to use them, but it is not the way he says to. Because how many times do you see a break level get hit and then, oh, look, break level hit. See ya, moves down. You know what I mean?
Yeah. Right.
But then he'll be like, oh, well, it eventually moved up. And it's like, well, yeah, dude, what, like a month later? You know what I mean? Like,
Right. No, of course.
so I mean, they're and that's the same thing with hard closes. They're such a delayed reaction. If this was my level and I waited for a hard close, okay, all right, I got a hard close. I can get in the trade. I'm a short. Look, stopped out. I'm done. You know what I
Right.
mean? At Moons. So those are two things that I would encourage you to step away from, especially the hard closes. The break levels, they have their time and place, but that's something we can talk about another time because I want to kind of focus on market structure. But
For sure, man. So you were saying you were talking about time frames and hard closing. So just a quick question: Would
yeah,
you, we're on the daily now? Would you say hard closes should be more looked down at lower time frames, like under the 4 hour, at the 1 hour, at the 15 minute,
I
or
would
just disregard that rule
I would
completely?
I would disregard hard closes altogether. Personally, I have.
Yeah.
I don't use them in any instance, in any case. I have not found a use for them. They're nothing but a delayed reaction because when you break a trend on a 4 hour or a daily, and Cotton gets this right, you can expect a 4 hour or daily move, right? If I wait for a hard close, like there's a trend, right? Let me make this invisible for just a second. Hide that. There's a trend, right? I'm not doing the whole wick to wick, kind of nonsense, because it doesn't really apply the way he says. Because sometimes one time frame trend is hit, and sometimes it's another time frame for different reasons. But you can clearly see this was like the main trend, right? And if I waited
Right.
for a hard close, so this was like my hard close right here. All right, well, I'm in a long. Well, like, yeah, I could have gotten a move and got up to here, but I mean, damn, man, I missed 70% of the move right here. You know what I
Mhm.
mean? So, I mean, hard closes, I may be wrong, but I don't see a real usable purpose for them other than saying, like, oh, look, if I go back here in the charts and like see when the hard close, like, oh yeah, look at hard close, and this is what he would always do, right? Like, oh, it's a hard close, like, see a hard close, and then it moved up, see, like it's like
Mhm.
a kind of like sleight of hand kind of thing, like, hindsight is 2020 kind of crap. Like, it doesn't.
Mhm.
Okay, how do I make money with that? Like, you can't, in my opinion. what you want to look for, especially in market structure, there's two different ways, and it's like we were talking about before, is you can use type 1 and type 2. Which one was that? This one? Okay. You can use type 1 and type 2. So for me, I don't use type 2, which type 2 is like the Wix, if I'm not mistaken. I think type 2 is the Wix. And then type 1 is like, let's say this is my swing high right here, okay? And like, let's say this is the high, and then I have a low here, okay? And, you know, say we're right here and none of this exists. And then this happens. As soon as this candle closes above that level on the time frame that I have it marked in, and I have it marked here because this is the highest point that has a candle before it that is the wick, the high is lower, and the high of the next candle is also lower than this one, okay? And the reason that it's not this one right here,
You want to go to the absolute highest?
yes,
Okay.
100%. And the reason is because this is a swing high, but not on this time frame. You know what I mean?
Right.
Like probably maybe the one, I would maybe say the 1 hour. Yep, it's the 1 hour. See, that's a swing high on the 1 hour, and then
Yeah.
it comes up, and now this one fails to break this one. If we use type 2, like, you know, mapping, like market structure, where we want to see a candle body close above it. So on the 1 hour, this was our swing high, and this was an attempt to break it. And you can see like it tried, but it kept wicking down, boom, boom, boom. But this was creating that daily, you know, this creating that daily swing high. So this whole area right here is just all part of that daily swing high. Like, you see what I'm saying? Like, I
Right.
think that is like a really important thing, because this is another point where people get so lost in the damn weeds, and they'll get down here on these micro time frames, and then they'll jump from a 5 minute to a daily or weekly, but they don't paint the whole picture throughout all the time frames. And it's not that you got to go through every single one, but there's a lot of information to be had, and the longer you do it, you can kind of see. And like, the reason I kind of could see that was like, you know, the 1 hour, what was, I mean, you just kind of see it. You can kind of count the candles, but you don't really need to do that, I guess, after a while. But that is something I kind of suggest doing, is marking things and like seeing where they land on other time frames below and above it, because it'll help you to have to switch between time frames so often, and you'll get a lot less confused. Because now when I see this, I can see like, okay, well, this is like the 1 hour and this is the 5 minute, you know what I mean? And I can see when it comes up here, it comes down, then goes up, then goes down, up, down, then back down, and up. You see what I mean?
Right.
So learning how to see those things fractally, training yourself to do that will help you tremendously. And you can kind of see, like, if we were to mark this one, this is more than likely the 5 minute or the 15 minute. I'd probably, man, where am I? Oh, I had this one marked the wrong color. We said this one was the 1 hour, right? That one I marked. Yeah, and then this one is the daily. Here we go. Oops. Damn, mouse gets away from me sometimes. But then if I go down to, I probably have to use my replay tool, so I'll cut this off, and then go down to the 5 minute reset. Okay. Yep. See? 5 minute. Bam. Nailed it. That was 5 minute swing structure. and you can see when it closed above this, like it moved up, and then like look what it back tested, like I mean very closely. You know what I'm saying? 40,
Right.
45. Let's say low 44 574, 44 551. Like that's really close. You know what I mean? And there's probably 1 minute swing structure in here that's relevant, but like I said, we don't really play those for marking our swing structure. I use those for my changes of character, to look at my entries, my flips, things like that. You know what I'm saying? Like
Right.
that's really what you want to use the under the 15 minute for. I use the 5 minute just because I think it's kind of beneficial for me in my style, because I like to keep my stop losses like under 0.25. Like I really like to see them like 0.05 to like 0.15. That's where I like them, and I still trade higher time frame stuff, but the way in which I trade is that's what I like my stops. I like them like around point 0.1, personally. So I can trade high amounts, and if I'm wrong, I'm wrong. I mean, that's what's helped me get better is like it all depends on the style of trader you want to be, I guess, is important to kind of add to that. Like if you're a position trader, like a 0.05 stop loss is not even remotely realistic. Like you don't need it, because you don't need 50 or 100x. You don't. You're trading 10x on a larger amount of money, so you have a bigger kind of cushion. But so you see what I'm saying about like the kind of the fractal nature and like how and I'm telling you, when I started to be able to spot these things, because I remember I used to see like Cotton pick these things out from multiple time frames away, and I was like, damn, man. I was like, that was like my litmus test for myself was like,
Right.
when I can pick out levels like that, I know I'll be getting like real close, at least. And I remember like when I first started being able to do that, it was really cool. Like that was just like a proud moment. As stupid as it may sound, but so all of these swings in here are important, but on which time frame? You know what I mean? Like, because you can see, even if you go down here, like, look, this is reacting to something, like this move in here, like it's reacting to something, but it's not reacting to 1 hour swing structure. It's reacting to like 15 minute, and in here is like 5 minute and 1 minute. So they all hold their different weight, and it's not to say that one is more important than the other, but I think it's more like Cotton says, like, oh, well, one's more important or stronger than the other. I think that's a very vague way to put it. I think a better way, personally, to put it is you can expect less out of a 4 hour than a daily, or a 1 hour than versus a 4 hour. So you can just expect a less percentage of a move. And you'd be surprised if you go back in time and measure all these responses within these time frames, you'll be able to glean so much information about, okay, well, this 4 hour level or origin or trend or whatever was broken. More times than not, X percentage happens. And then you obviously have to kind of couple that with what is behind the move. Like what is my resistance? Where is it heading? You know what I'm saying? Like
Right.
what is in favor and what is against me? Because that's also very important. It's like, where did I come from and where did I go? Like, where am I going? Like, what do I have back here? And then what do I have right here? So using those things in like a culmination together will help you kind of glean a lot more information. Now, like on like the market structure, front, I think, and I don't know if this is something that, let me jump over to my chart. And there's probably going to be a lot of stuff on here that doesn't even make sense, but I'm like working on some other things.
No worries.
But so let's see. Let's go to. Okay, so the other day you had said the daily, right? Like
Yeah,
you
the daily,
said
and I was counting the
what?
body and hard close below it.
Yeah, and what was your level, if you don't mind me asking? Do you have it in
Yeah,
front
let me
of
take a
you?
look really quick.
Yeah.
So I was going a little bit farther back in time. Do you remember that level you marked all the way at the beginning of the move on May 19th, 21?
Okay. 19, so that'd be okay.
Just
So
about there, like.
okay, on a daily. So you're marking a swing low on this right here.
That's right. Yeah.
Okay, now where was your? Let me go. Let me go to my other chart. This will be easier. Let me go to my other chart. Let me clear all this off. Remove drawings. All right, and then go to the daily, and then pop a line on May 19th, which was right here. Okay, now what was your high at that point? What was the high that you had?
The high?
Yeah, yeah. What? Because
Mm-hmm.
I think an important way to mark swing structure is like, what is the? It doesn't matter if you're going in accumulation or up or distribution or down.
Oh, yeah.
Like what is the low you need to lose to go down, and what is the high you need to gain to go up? It doesn't matter
So
which
the
way
high
you're
was,
headed.
I had 30, let me see here, 39 241.5. Just like the top of the body there on that swing.
Okay, well. So, oh, okay. Let's see. 30, I'm sorry, say it one more time. I'm sorry, buddy.
Yeah, no,
30,
no worries.
30,
Was 39 241.5.
39. Oh, okay, I see. I see. All right, and that's on Binance, right?
Yeah, this is
Okay,
Binance. My
okay.
bad.
All right.
Yeah.
No, no worries, no worries. Yeah. So, see, okay, I see our, and this is I thought this may be kind of what it was. Is like this is this is him kind of teaching that bodies are important, which they are, but I would
Mhm.
argue that there's a simpler way to put it. Like, these bodies are important, and Cotton does the same thing. Like, he doesn't really say, and I've heard him directly asked many times, like, well, why does the bodies hit and like not the wicks? And he's like, oh, it's just like a greedier part of the move, you know what I mean? Or like the top of the
Mhm.
body versus whatever, you know. He would never have he would always have a terrible explanation for it. So my explanation for it, and the reason why I think that this is right but also wrong. So
Mhm.
I would say it's right, but it's wrong on this time frame. I would say it's right on another time frame. So if
Mhm.
we kind of go down, let's go up. I don't
Oh, really
think,
quick. So,
yeah.
what would you consider right on the daily? Just so I get kind of my gears together. How you do this?
Okay, so like where we're at right now in this moment in time.
From the swing low I marked to the swing high, from that general area,
Okay,
you would mark.
yeah.
Well, to put it simple, you would mark the wicks too. Correct?
Yeah, well, always the
Yeah.
wicks for swing structure, and I would look for closes above. So, like, give me like a brief second to kind of walk through this like mentally here.
Mhm.
And I'm saying hi, but I'm just listening
Hey,
too. So go.
oh, hey.
Don't let me
Hey,
interrupt the
Queen.
Oh,
flow.
okay, yeah, you're good. You're good. Okay, so this, yeah, it's gonna take me about 2 or 3 minutes. So y'all feel free to talk, but I gotta figure it out. I gotta walk through it.
Hey, what's up, Queen?
Can you hear me okay?
I can hear you fine.
Okay. I'm glad I caught you guys. Oh my God. I was at an anime convention with a bunch of
Nice.
What the hell?
nerds.
Oh, nice.
Hey, easy, easy.
No, I know. I was wearing my One Punch Man shirt, so
You were wearing what?
I just my One Punch Man shirt.
Nice.
One Punch Man. Have you watched that?
No, I've
Yeah,
heard
that
of
show's
it.
like
Heard of it.
crazy. It's hilarious. Yeah.
Oh
I've heard
yeah,
of
you
it.
gotta watch that one.
Yeah.
It's good.
Yeah, I'll check it
Mhm.
out.
This guy that I work with, he's one of the bell drivers at my hotel, and this guy's like got anime tattoos, dresses like a
Mm.
Japanese kid, listens to
Oh
Japanese
wow.
anime music soundtracks.
Yeah,
He's like
that's
a
hardcore.
weeaboo, hardcore weeaboo.
Weeaboo. Yeah, my one of my daughters is well, two of them are kind of like that, but they're
Yeah.
gonna start learning Japanese and stuff now. We just got their books, and
Oh, that's cool. Yeah, at least they're learning Japanese too.
I know we told them if they learn and they can do some basic conversations, that we'll take them to Japan next year. It's like a good motivation, I think.
That's actually really good motivation.
I know. I'd learn.
Yeah, no shit.
Tired. Fuck.
I bet.
And I eat trash right now, so I'm coming down.
Yeah, it always makes you feel like crap, right? Ugh,
Mhm.
the worst. So, all right, almost got it. Just need about 1 or 2 more minutes.
No worries, man.
This, that.
Hey, Trooper, would we be able to see you in a live trade sometime?
Yeah, for sure. Like, I really do want to get on like a better schedule with stuff. You know what I mean? Yeah, I'm super down to do that. And I think it's even more beneficial for like other people to take trades and for other people to give their insight. I mean, I know that Queen and I did it, with her in a trade, and I mean, from what she said, it was helpful for her, and it was
Absolutely.
fun. It was a lot of fun, and it's so much different for me because I can really kind of explain things better when it's not really me or my money on the line.
Yeah,
Even,
exactly.
and it doesn't like it sounds silly, but like it doesn't matter if she had a $5 trade, and if I had a $5 trade, I'm gonna walk her through a $5 trade differently than I would walk everybody else through my $5 trade.
Oh, absolutely, man.
So but 100%, like I'm willing to do it. I'm not gonna be one of these people like shit. You'll see me get stopped out plenty, like I do, like, and I don't give a shit who else was taking the trade. Which is why most people don't show that kind of crap. Like everybody gets stopped out, man, and I think that's such a disservice to everybody because everybody likes to paint themselves in this like, all my trading is like unicorns and rainbows, and it's not, man. Like it's not. You get stopped out every day. You lose money some days. Sometimes you walk away the whole week and you get your ass handed to you. I mean, you get spanked all week. Sometimes it's a whole month. And then some days you walk away feeling like a god. You're like, bitch, I got fucking 7% today. And all my entries and my take profits were then $5, like that's just trading, man. And that's why Cotton took 3 trades in the time that, Queen and I like were following him for well over a year. It's because he knows that too, but that ruined his brand of max leverage, max position size trader,
Right.
So, but yeah, man, I'm definitely down to do that, for sure. I definitely want to get on like a better schedule. Okay. So this would have been low and bam. Okay. So this broke. Okay. So yeah. All right. So I'm going to leave this one out to the side over here, just a little below where I would actually have it.
Mm-hmm.
Okay, so mine is going to be the green ones. Okay. So my levels are the green ones and your levels are the red ones. Okay?
Right.
All right. So, and the reason in which I had this as my daily high and this is my daily low, because we had the same low. Go ahead.
One thing I want to add really quick is,
Yeah.
sometimes I do count in the wicks, like on this, not just the bodies, because
Mhm.
the wick is so long and there was probably so much action in there that
Yeah,
it
but
would make more sense to count in it. So
okay, but like sometimes that kind of rule comes into play because I do
Mhm.
it as well for certain things, but for market structure, I would suggest making it as mechanical as you possibly can. Like, give yourself a set of rules to follow. Again, I can't reiterate it enough. The more variancy or like decision you can put on a piece of paper and make it like these, 5, 10, 1,500 rules, whatever, for like your structure and for hell, even your whole trading. The more you can make rules out of that, the easier you're going to make it on yourself because the less emotions that are going to be involved. And if you've proven your strategy and your rule set over time, it's like profitable. You can lose, like I said earlier, you can lose 20 trades in a row. It doesn't matter. Like, it's good. Sucks, but I'm a little pissed. But hey, I know I've got 80 more trades. You know what I mean? And I know over 100 trades that I'm profitable. So I just got to let it play out. I think that's like really important, especially for market structure. The only time there's a couple of times I guess I use the whole like larger wick things, and I'll do it in structure, but I've got to go through all of the time frames first because there's an instance like over here, and I think it has, and I can't fully explain this, and I'll be 100% honest. Like I'll be transparent. Like I can't fully explain this, but I feel that this wick right here shouldn't be counted on a day. I mean, this was a massive wick though, too, right? I mean, it's
Mhm.
to be fair, like it's quite as big as that one, but it's also that like all of this kind of came down to that same point. So this was like a baseline of this, like all these moves right here. But at first, I did mark it, and I'll tell you the reason that I stopped marking it as like a daily is because when I was going through this move right here, and I had all of these like swing highs and lows picked on the daily, there was something that wasn't adding up for me. And it was
Mhm.
like when this broke. So, first of all, when I had this high marked and
Mhm.
this body closed above it, that should have signified a high probability that we continued to move up. We would have pulled back and then it would have moved up. But we did that and then we did it again here. So I think that these were 4 hour and 12 hour levels in here that were really important. And because this was a range that we spent so much time in, like we were in this like span from the top of the move to the top of this move for 90 days, like 3 months. You know what I mean? So
Mhm.
that's kind of where I was like, well, I don't really think that this is part of it. You know what I mean? Like I think it was something on another time frame. And I think it ended up being like a 1 hour or maybe a 4 hour. But I just don't think it was important on the daily. And you're always going to have a little bit of subjectivity or a little small piece of your market structure or your strategy that is kind of left up to your intuition. The main point is to make as little of your strategy and as little as your mapping left up to that intuition, and as much as you can put it in your notepad or your whatever, and like that's your rule set. You see what I'm saying?
Definitely. Cool.
But walk through all these swings through here, and you'll see what I'm saying. It would take me like an hour to walk through all this and show you what I mean. But take what I'm showing you tonight, and then start walking through this from like up here down and over to here. You'll see what I'm saying. You'll see how this was like it was very much more important on like the 1 hour and the 4 hour, and it all
Mhm.
built up to. And I think this is what like MintFX was trying to show, because if you can go on this swing high, you can see how all these bodies closed right at it, right? Because that's
Right.
where the majority of the volume is on the closes and opens. And then here it You know, if we went by Cotton's hard close, we would have like totally missed the boat. But and then it dumps down. But you'll see what I'm saying when you walk through it after you take like kind of what I walked through tonight and then go through it yourself. You'll see. I promise you, it'll be very apparent. So for this instance, you had the body marked as your high and then the wick marked as your low because it was a long wick, which, like I said, over here kind of makes sense in this instance, but I would just have taken the reverse side of that train of thought. And for me, I had the high and the low marked here on the green ones. And the reason is because once upon a time, like this was the high. I'm going to mark these as like white. Okay. And then I'm going to clone this one. And this would have been like my low. It may have been in here, but for argument's sake, we're just going to do it here. When this broke, this is an important part. When this broke, this high, I'm going to now find like the lowest point between this point and this point, and that's going to be my swing low, which is how we determined this was the low, okay? Right. So whenever it broke, now I'll take this, and whatever criteria I set forth as far as percentages, or if I want a certain number of succession of candles, I would have to find my criterion here. For me, like none of this meets my criteria on the daily, and I'm going to come straight up to that. Okay? You with me so far?
Yeah.
Okay. So now, this is my high. If I want to continue in an uptrend, I need to lose this, or gain it rather. And if I want to reverse trends and go down, I need to lose this. Well, I gain it, obviously. So I'll leave this here for right now, and I'm going to find the lowest point from here down over to this point up. You see what I mean? So like if I were to just make like a box and go just like that, I'm going to find the lowest point in that box. So I'll pull this up to that right there. So that's my low. And then really important, don't forget to move your swing high because that's already been broken. And I'm going to do the same thing. All right. So this broke my high before anything broke my low because none of this was here, you know. So we'll do the same thing within the high. And what broke the high, where's the lowest point? It's right there. Okay. And you can see it bounces off of it right there. And yeah, it wicks through it and all this, but again, these are different time frames. That's all that is. It's just this is lower time frames. So on this time frame, this breaks it. So we move that to there. So now this is my high, this is my low. Well, this breaks my low first. So now we're changing trend. So now I'm no longer in an uptrend. And this is where, I mean, it was already really apparent through here, like we were in distribution. You know, even though this broke like the previous high, it was just how it did it. Because you can kind of see back here, it was like little pullback and then boom, moon up. This one was like big pullback, you know, accumulate a little bit, little pullback, you know, pullback, little, you know, accumulation. So you can see the weakness in it in here, right? Like you're developing origins, which tells you kind of reversing trends. So now we're changing trends because we broke this because we closed below it. Not a hard close, but just a candle body closed through it, okay? So now whenever you change trend, the opposing side usually stays the same, more times than not. So this one is going to stay the same. And then we just move our low from there to here. Because even though there is a valley right there, that's not going to meet my criteria for my daily, which is, like I told you before, 24%, you know? So now this is my high. If I want to get back on an uptrend, I need to break that. If I want to continue my downtrend, I need to break this. And so we do. We make an attempt, it wicks through it, then it comes up. and then it closes below it. So at this point, we've broken it. So now I need to wait for this move to finish. And a big part of like how I determine, like, you know, when do I mark it after it breaks, it kind of varies a little bit from time frame to time frame, but it's generally the same. You can follow the wicks. So like you've got, this one closes below right here. So you've got the low of the wick, and this is a lower low of the wick, and then this is a lower low of the wick. And then when you have a higher low of the wick, you can measure from here to here. And I'm going to measure from right there to right there. That's only 8.72%. So I know this is probably like some 8-hour BS. You know what I mean? It will qualify on my 4-hour, but it's not a daily for me. It's also not very apparent as well, you know? So I'm just going to keep following it down. Lower low, and then, okay, I got a higher high. So now I would kind of take the bottom of this wick, and then I would measure up to there. 43%, yeah, that qualifies. You see what I'm saying? So
Right.
at that point, like, that's where I would move my, that's why I have my green level down here. So I can go ahead and delete this one at the time. And then whenever I broke this one, I would find that highest point between here and whatever broke it, which ended up being here. So I can delete that. That now becomes the green one. That make sense?
Completely.
Okay, so
So
that's how you really, in my opinion, want to find like your relevant swing structure. And I've literally, like, I've watched fucking countless hours of watching people do it, and like I learned more from a lot of Forex guys than anyone as far as market structure is concerned.
Yeah,
But
I agree.
it had to be adapted, and it's a process I'm still trying to perfect, and like how to adapt it, because none of those guys trade crypto. Like, they talk about guys in their group that trade crypto, and they may dabble in it, but Forex is a different beast, man. That's a whole different asset class. That shit moves like 1 or 2% in a day on the common pairs. And like the common pairs in crypto move like 5, 10, 15% in a day. So we can never expect it to behave the same, because it's more times than not, it's a totally different group of traders that are trading it, which is why you'll go from one chart, and even within crypto, you'll go from one chart to another, and volatility aside, it still seemingly behaves different. Like, it seems to respect 5 minutes more than 1 hours, or this one does 4 hours more. Like, it's just the traders that are trading it, you know what I'm saying? And like the traders that not are just trading it right now, but it's also the ones that have traded it in the past. Because if you think about it, like how I'm always saying, like, these charts are made up of like a domino effect. So things that traders did in January of last year, and even before that, but are still having an effect on the charts right now. You know what I mean? Like, it's just all this like geometrical kind of domino effect. So it's like, especially the ones with like the bigger amounts of money, the more amount of money they have and the more times they trade, the more impact they have. And if they prefer this time frame or that or whatever, that shit is going to hold true for a long time. And even once it's dissipating and somebody else comes in and they like this time frame or that one, completely opposite to what the other guy liked, it's going to take a while for it to completely shift over. So it's like this big, Titanic, ship in the ocean that's coming up on an iceberg. You know what I mean? And it takes a while to turn it and get away from it. It's not something you can just like do like in a speedboat where you're like, well, let me spin the wheel and I'll snap right around. Like, it doesn't work like that. So it's cause and effects. Therefore, you could put those same exact terms into a different two different words, but meaning the same thing: supply and demand. Supply and demand is cause and effect, and cause and effect is supply and demand. Like they're the same thing.
It's a really good way to put it. Yeah.
So like I said to you the other night, like I'm certainly not saying you're wrong. That is one way to look at it. I would just argue that these are different time frames. Like I said before, these are simply different time frames. I think we went up, right? Like we went up in a time frame. Yeah. See, when I first went up, you see what you have is like you kind of have like a high here on that. But let's look at the 4, because I would argue it's probably lower. I would say it's like a 4 or 1 hour. Yeah, so, okay. Yeah, so you definitely have it on the 4 hour here. Like that would have been your high, the body. But I bet you it's the 1 hour, because usually if it's a body, it's further back in time. So let's look at the 1 hour. Let's see. You can sometimes you kind of cut the stuff out because just the way you're marking it. It's definitely important on the 1 and the 4 hour though, right here, and that's why these are the bodies that are closing. You see what I'm saying? Like when we go back to the daily, right. Like those bodies that are closing right here and what are wicking it, these are the lower time frames right there. I guess it's kind of frozen up. Let me use my replayer. We'll cut it off here. And then go down to 15. Yeah, see, it's right here. You see what I'm saying? Like this is the level that by marking the body of that it's showing you the levels right here. Like it's showing you, it's just doing it in a kind of a cruder way. I guess is the way I can put it.
Like not as accurate, you mean?
Yeah, exactly. Yeah, like whenever you have a body, yeah, exactly. Like, I mean, that's why if you go on a daily, you can see like levels hit all the time. But then if you zoom in, you're like, oh shit, that was $300 off. It's not as accurate. It's the same thing with bodies. So the thing about bodies is just being different time frames within a candle. So a body on a daily is more than likely just like a 1 hour or 4 hour, 15 minute or something like that. A body on a 4 hour is more than likely like a 5 minute, maybe a 15, or even a 1 minute, and so on and so forth as it goes down. The body on a 1 or a 5 minute candle is more than likely like a 15 second or 30 second candle, like a wick. So they all represent the same thing, but just on different time frames. But people have seen that, and this is my opinion. So I may be wrong, but I truly don't think I am. It's people have seen a way, just like Cotton has. Like he saw a way to, take what he learned from Dope, and then he figured out where Dope learned what he learned, and he found a way to rebrand it and package it up in a new shiny box and put cotton candy freaking TA on it and say he invented it himself and like he's good to go. And like, I'm not trying to like talk shit about him. I mean, it's brilliant. Like he did an amazing job. That scummy, but it's brilliant. So I'll give him props. I don't do it just to trash talk him by no means. But it's the same thing in my opinion. The whole bodies, and this became like real big like a year or two ago. Like some people were doing it, but then it really picked up steam. Because I remember kind of seeing it, and I was like, oh, and I remember talking to, people like Tommy and stuff, and like, yeah, like, bodies, and like we would discuss how it was on our time frames, and more times than not, like if you'd mark the body on like an inverse level under here, it was just a hold or a break on another time frame. You know what I mean? And then there was other people that were way better than us at the time, and they learned how to kind of market it and make it a whole new strategy, or just make it seem new, even though it's the same shit. You know what I mean? Like, so I think personally you should mark things from wick to wick as far as market structure is concerned within the time frame that you're in. Now, as far as taking trades, like, yeah, I mean, I take bodies all the time, but it just depends. As I've progressed, I've gotten more towards like the greedier part of things, because I know I can just go down in time frames and take like the greediest spot, and I know when it's going to get there. And I can do the same thing like down here when this is the swing high, and I can play this little tiny pullback. You know, it all depends on what am I looking for out of a trade. Am I looking for like 0.5%, 5%, 10%? Do I want to be in the trade for an hour, 7 hours, or 15 days, or 3 months? I mean, it really does. To give Con credit, that's one thing I agree that with him is like, it really a lot does depend on the type of trader you want to be. I agree with that 100%. So I'll definitely give him credit for that. I happen to agree with that.
Hey man, thank you very much. Actually, it makes complete sense. The wicks for fractal nature for lower time frames, how you're explaining everything.
That's right. Yeah, man. I'm glad that I know it's kind of like it's all over the place, and it'll take kind of a little bit for you to apply it and look at it in the charts and see, and then you'll formulate questions, and then you can ask me or fucking somebody else better than me or whatever. You know what I mean? Doesn't matter. Like, I just hopefully it kind of gives you like another perspective, because I just remember the other night, like you saying, like it's it's going down because it lost the daily. You know what I mean? And
Right.
like that very well could have been right, but it's like, look how far it went up from that point in time. You know what I'm saying? Like where we were at that point, like you could have made a lot of trades, and I just wanted to make sure, I guess my whole point in having this conversation with you was to make sure you weren't putting yourself in too large of a box and like waiting weeks. And that may be the type of trader you want to be. I'm not certain, but I know that was a mistake I made. It's like I'd be waiting for these like points, and it was like, shit, man, like I'm sitting here waiting for a week for a trade, and then I miss it by $1. I missed two yesterday by freaking $2 and $4. And it's like, man, like I can't always wait on these like perfect little points. Like, all right, I'm going to wait for this point right here. If I'm only waiting on that, like I would have only gotten another one right now, which, would have been from May 21st to, what time was this? 7:30 to, 6 o'clock. I mean, if I'm a scalper, like shit, man, that's a lot of time. You know what I mean? Like you can take a dozen trades a day, but what do you want to get out of each trade? Is 1/4% okay? 0.5%? 1%? I mean, for me, I like trades that are, at least 0.5 to 1%, and I prefer to be in and out of them in a day, but I'll hang in them for a couple of days if I need to, and I'll formulate different strategies. So I'm trying to kind of diversify myself as a trader, to where mostly I get in there and I take 1 or 2 trades a day, and I get my 3-4% out of each trade. Sometimes it's only 1 or 2, but if I can get a few percent a day with my trade size, I'm good. And then if I see like a really, sweet spot, like on a high time frame, like up here, I'm like, okay, well shit, I know I'm going to stay in this one for a minute, because I know that like we're in a downtrend going down. So I should expect to like at least lose this And so we did. So like you could have gotten out like right here, but I would advise to take profits here, take profits here, take profits here. You know what I mean? All along down the way. So that you got to kind of like formulate what kind of trader do you want to be? What kind of money do you need to make? What kind of money do you have? So on and so forth. There's a lot of variables, you know?
Completely.
Look at it. That's that weekly origin. Like, look at that shit just being like, man, you could have just used this as like your little magnifying glass to like take your trades, and just off of that weekly origin, like, look at all that. Bing, 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 bing. Like, it just nails it. It's just hugging it.
Right.
You can tell that overall that's what it's struggling with right there. You know, as soon as it goes below it, it tries to come up and it closes below it. See, all those bodies close. And it comes down. You know, people get kind of freaked out. Comes down. Same thing. Wicks. Nothing closes above. Closes above, comes down, and comes up. And then, boom, almost bounces right off of it. Then, again, another higher time frame level. I think this was the daily that I had marked earlier. The same thing. Like, it's just the same thing. Like, all this is a higher time frame, just testing a level, you know?
Mm-hmm.
That's all it is. And that was, Cotton missed the boat on this one because he was like, he never explained what a tested level is. He did kind of in his news series, but that was only after all of us in our group were complaining about how much he missed the boat on. Then, you know, mysteriously he makes a new series about, oh yeah, this is what a tested level is, you know.
Mm-hmm.
But you can see like when it's trying to close above that, because again, I've said last week this was important for this candle to close above this level. We're right back to that, so it's just as important now.
Mm-hmm.
Which I think it's kind of playing out until the month, you know, which
Mm-hmm.
I said last week. I was like, well, the monthly is going to be the one that's really going to seal Bitcoin's fate and crypto for that matter. If we can kind of close above that at the end of the month, I think we have a decent chance of being okay. If not, then rest in peace, at least for a bit, you know. Like
Yeah, completely.
we're gonna go down, but it does seem like this was merely a wick to grab liquidity, and then further a move up. I would have liked to see it move up a little quicker than this, though. But
Yeah.
it is trying. It's trying. Sometimes it takes a little bit of time to build, you know, faith back up in the market, especially crypto, because it's like a bunch of younger people, you know what I mean? And they're a little more excitable,
Mm-hmm.
I guess.
Would you say it's kind of like Pandora's boxing? Is that a thing we can still use?
Yeah, it is. I think it's just important to recognize that as being the same thing as like an origin level. You know what I mean?
Right.
And an origin level in a Pandora's box is essentially the same thing as a range. I mean, you know, they're not exactly the same thing, but they are in a way. Like, they're closely related. They're just kind of different ways to look at it, I guess,
Mhm.
is the way I think about it. But yes, that's exactly what's happening. And what I think is important to remember is like when you have like these origin levels or the opposite ends of the Pandora's box, you're almost always, you know, they're almost always going to be setting people up on all these moves right here. So people are entering shorts, comes down. People are entering more shorts, and these, you know, a lot of these idiots stayed in their shorts. Then it comes down. All these idiots stayed in their shorts, and then more enter in their shorts. But it goes up, grabs some of their stops, you know, and then they're doing the same thing, just like they kind of did back here, but a little bit on lower time frames. You know, maybe 15 minute through here, you'd see a lot more. and then it moves up, grabs all that liquidity, and then dumps down. And it's important, like, what happens after that liquidity grab. Like, does it gain the low or the high? You know what I mean? So, like, if we came
Right.
up here and we grabbed all the liquidity above this, but we still didn't lose this low, which I think is important. And then we kind of came down. We started trending down. We still didn't lose that low. And this is my 1 hour, like, relevant low. And we've never lost that. Not since all of this. Not since that liquidity grab. You know what I mean? And then we have this kind of like range trend, as Cotton would call it. This one's kind of worthless at this point, but this one's still kind of relevant. So I think that's just important to, oh yeah, this looks like a sweet spot to take. And yeah, it was. Like, you could have got a good long through here, but you also got to be mindful about what's back here. What are they trying to bait you into? With 2-3 touches over the span of time, like, you're probably okay, but I wouldn't do it again. Like, if it comes down here, I don't know that I would, like, take a level on a 1 hour, maybe a daily or something. Like, yeah, okay, but I would look for my level on a smaller time frame. But what I'm saying is, like, this buildup of liquidity over an hour time frame, I wouldn't get in on like a fourth touch in here. If this was a daily over like a month or two, then yeah, I might take it. You see what I'm saying? Like, that's, again, everything is kind of time frame dependent. Each time frame holds a little bit more weight, and it's not like a super simple, sexy freaking answer. That I realize that, but I think the best way to
Cutting out.
overcome that.
Yeah, you're cutting out.
Oh, can you hear me now?
Mm-hmm.
Okay. Well, nobody
Is
said
it
nothing.
my internet? Because now both of you guys are cutting out on me.
I am too.
Yeah.
Yeah,
Really?
I've heard both of y'all fine. I think it's y'all's Bobo internet trying to blame me.
Dial-up's affordable, bro. I'm a day trader, so that's why.
Dial up.
But
Okay, now you're good. You guys are
you're
good.
good? Okay. But yeah, so I think a good way to overcome all the whole time frame confusion is to start at the higher time frames and see what you see on like a monthly or weekly, which you only really got to look at those like, once a week or once or twice a month, really. Start at the daily and write down what you see. Like, just, it doesn't have to be very in depth, but just write it down. Like, what is it doing right now? What did it just do? And then go down through time frames. And then when you go down through all of them, you already have what you think you see in your mind, but then read what you wrote down. And then, like, put that shit on like a erase board, like in front of you, for the day, and refer back to it, and it'll help you. I promise it'll help you. It gives you perspective and keeps you from getting lost in the micro time frames, which is really easy to do.
Oh, man, I really appreciated that. That was a good little lesson.
Good. Yeah, man. Of course, anytime. It's no worries whatsoever. I'm glad you found it useful, and like I said, try to apply it. And if you have questions about it after a day or a week or whatever, like, just hit me up. Let me know. And I want to try to kind of do VCs more often because they're more like time efficient. Sometimes, man, like typing shit out and like chat and stuff is just like, ugh. I mean, if somebody's asking what a hold level is, like, sure, like I can do that with like one graph or, but if I'm trying to like get a point of mine across or answer a question or whatever, it doesn't matter. Like, and it's somebody from like yourself that's already advanced, it's fucking hard to type all that shit out.
No, honestly,
It takes
at
a lot
least
of
we
time.
can. show each other's charts, talk on the fly, not just waiting for something to come up, or somebody to reply to
Yeah.
a message.
Yeah. Yeah, that's good. Yeah, I'm glad.
Which days do you happen to work now, Brian?
It's kind of like it kind of varies because I'm only like doing like the other stuff is like I'll get like little side jobs and
Hmm.
sometimes like when my old boss like needs me to help him, like I'll go in for a day or two or three in a week sometimes.
Hmm.
So it kind of varies. It's whatever I want to make it. Like that's one good thing. Like I don't. It's 100% like my schedule now. So I kind of schedule shit as like I want to do it, and I do it. One to help me ease the mental strain